Welcome to Everyday Finance, where we break down money tips into simple everyday steps you can actually use. Whether you're budgeting, saving, or just trying to make sense of your finances, you're in the right place. So, let's dive right in. Investing means putting your money into something that can grow in value over time, like stocks, real estate, or mutual funds. Imagine you have $100. You could spend it on a nice dinner, or you could invest it in something that might be worth more in the future. That's the essence of investing, using your money to make more money. Think of investing as planting a tree. You start with a small seed, your initial investment. Over time, with the right care and conditions, that seed grows into a strong, fruitful tree. The key is patience and consistency. Just like you wouldn't expect a tree to grow overnight, you shouldn't expect instant returns from your investments. Why invest? It's one of the most effective ways to build wealth over time. By investing, you put your money to work for you, allowing it to grow and compound. This is especially important given inflation, which erodes the purchasing power of your money over time. Investing helps you stay ahead of inflation and secure your financial future. Let's get started. When it comes to investing, there are several options to choose from. Let's look at some of the most common types of investments. First up, we have stocks. When you buy a stock, you're buying a small piece of ownership in a company. If the company does well, the value of your stock can increase and you may also receive dividends. Next, we have bonds. Bonds are essentially loans that you give to a company or government in exchange for interest payments. They're generally considered safer than stocks, but they also offer lower returns. ETFs and mutual funds are another popular option. These are baskets of investments that pool money from many investors to buy a diversified portfolio of stocks, bonds, or other assets. The main advantage of ETFs and mutual funds is that they provide instant diversification, which can reduce risk. Chapter 3: How to Start Investing. Now that we've covered the basics of what investing is and the common types of investments, let's talk about how to get started. The first step is to set a financial goal. What are you investing for? Is it retirement, buying a house, or generating extra income? Your goal will help guide your investment strategy. Once you have a goal in mind, the next step is to choose an investment platform. There are many options out there, from traditional brokerage firms like Fidelity and Vanguard to newer apps like Robinhood. Each platform has its own features and fees, so take the time to research and find the one that best suits your needs. When you're ready to start investing, remember that you don't need a lot of money. You can start with as little as $10. The key is to start small and gradually increase your investments as you gain more confidence and experience. This approach allows you to learn without risking too much capital. Consistency is crucial when it comes to investing. Make it a habit to invest regularly, whether it's weekly, monthly, or quarterly. This strategy, known as dollar-cost averaging, helps reduce the impact of market volatility and can lead to better long-term returns. Another important step is to diversify your investments. Don't put all your money into one stock or asset. Spread your investments across different types of assets to reduce risk and increase your chances of success. A diversified portfolio is more likely to weather market downturns and provide steady growth. It's also essential to keep your emotions in check. The stock market can be unpredictable and it's easy to get caught up in the excitement or panic. Avoid making impulsive decisions based on short-term market movements. Stick to your investment plan and focus on the long term. Finally, be patient. Investing is a long-term journey and it takes time to see significant results. Hey, if you're finding this helpful and learning something new about investing, do me a quick favor, hit that like button. It really helps more people discover this kind of content. And if you want more tips on saving, investing, and practical financial knowledge, make sure to subscribe and turn on the notification bell so you don't miss out. Your future self will thank you. Chapter 4: Tips for Beginners. As a beginner investor, it's important to keep a few key tips in mind to help you succeed. First and foremost, focus on the long term. Investing is not a get-rich-quick scheme. It's about building wealth over time. Stay patient and avoid the temptation to chase short-term gains. Diversify your investments. We mentioned this earlier, but it's worth repeating. A diversified portfolio helps spread risk and can lead to more stable returns. Don't put all your eggs in one basket. Invest in a mix of stocks, bonds, real estate, and other assets. Avoid making emotional decisions. The market will have its ups and downs, and it's easy to get caught up in the excitement or fear. Stick to your investment plan and avoid making impulsive decisions based on short-term market movements. Remember, investing is a marathon, not a sprint. Don't try to time the market. It's nearly impossible to predict market movements with accuracy. Instead of trying to buy low and sell high, focus on consistent, regular investments. This strategy, known as dollar cost averaging, can help reduce the impact of market volatility. Educate yourself. Investing can be complex, but the more you learn, the better equipped you'll be to make informed decisions. Read books, take online courses, and follow reputable financial news sources. The more knowledge you have, the more confident you'll be in your investing decisions. Consider seeking professional advice. If you're unsure where to start or need help creating a diversified portfolio, a financial advisor can provide valuable guidance. They can help you develop a personalized investment plan based on your goals, risk tolerance, and time horizon. Stay disciplined and stick to your investment plan. Investing isn't about being rich, it's about building wealth over time. The earlier you start, the better your future self will thank you. Happy investing. Thanks for watching. I hope you got real value out of today's video. If you did, go ahead and hit that like button and share this with someone who's also looking to start investing. And if you haven't already, subscribe to the channel and tap the notification bell. We've got new videos every week to help you save smarter, invest wiser, and build long-term financial success. Until next time, take care of your money, and it'll take care of you.